Hi guys, welcome back. Now I am going to explain about like a missionary account straight line method. Okay, how we are going to calculate missionary account straight line method. For example, if we are purchasing any missionary like a business use, company use, how we are going to calculate straight line method. Last video I explained like how this we are going to use for the return down and straight line method, correct? The next video I am going to compare that one, but now we have to basic, we want to know what is the straight line method, correct? So you can see this video, you can understand very easily like a straight line method how we are going to calculate. At the same time I am also going to teach very easy accounting only, not for the very difficult, not I am not going to confuse anyone. It's very easy. If anybody like a school guy is accounting guy is saw this video, he can understand easily how we are going to calculate the depreciation, what is the concept of depreciation. He can understand easily. Okay, you can see this depreciation accounting for example, a machinery purchase done 1st July 1999, correct, at a cost of 8,000. This is the example, that's why I made a small amount. Okay, 8,000 and rupees 2,000 was spent on installation. Okay, they purchased the machine cost only 8,000, but they spent 2,000 for the installment charge. Then this depreciation return of 10 percentage on original cost every year. This is the main point, guys. Original cost every year, that means this is the straight line method. You can easily understand. If they are not going to mention, you have to prepare straight line method depreciation, but they are put it in the question original cost every year, that means straight line method. Because return value method I already explained, this year by year what are the value after the depreciation, what is the asset value will come, we are going to that is called return value, correct? So we have to calculate based on that. But this original cost means this not going to change. For example, 8,000 per cost of machinery, 2,000 for the first time installation, correct? That is also we have to make it in the asset. Total 10,000. So every year we have to take 10,000. Okay. Then the books are closed on 31st December each year. That means they purchased July, but they closed 31st. Every year they are going to close the 31st. So the first year have I think a 6 month, correct? So next year the 12 month it will come. See, you can see the question again. The machinery was sold for 4,000 on 31st March 2022. Show the machinery account for all the years. I think after the 4th year they sold the machinery. That's also mid of the starting March month they sold. So that means what we are going to make the depreciation account, like we have to make the purchasing. When we purchased, we have to calculate the depreciation until when they was sold. Okay, we have to calculate. Then we want to know that's loss or profit also. You can sum. So this is the machinery account format. Okay, I make it year by year. Okay, I'm going to explain also year by year. You can see this machinery account. You can see the first format. What is the format? Machinery account. Date, particulars, amount, date, particular amount. That means what? The date, we have to put which year we purchased, which date also. So we have to put the date. Then that obviously we are going to take from the money bank, correct? That is called 8,000. Then the date 1999. Again that's depreciation amount, like what are the depreciation, it will come like that, correct? So I will show that what is the formula and how they are going to do. For example, I put it here 8,000 only. You can see this 8,000, this is the bank account, that is the opening, like when we are purchased the amount, machinery, that is this amount we used, correct? The 8,000 for the cost of the machinery, we have to put 8,000. Then you can see when we purchase July. Okay, we have to calculate 6 months. That year how many months? July to December, only 6 months. You have to calculate 6 months. How we are going to calculate? You can see the formula 8,000 into 10 percentage into 6 by 2. The 8,000 is the cost of the machinery into 10 percentage is as per the government they given for the 10 percentage into 6 by 12. That means this is not a full year because the mid of the year they purchased it, right? That means that's not a full year. So we have to calculate until which month they purchased and when this year is going to close as per the company. Which year they are going to close? 31st of December, correct? So July to 31st we have to calculate. That means 6 months. You can put 6 divided by 12. 6 means this remaining month and by 12 means that is the whole year, like 1 year 12 month. That is the concept, okay? This after the answer it will come 400, okay? You have to minus that 400 minus 8,000, it will come 7,600. This is for written down value, okay? That year written down value for the 7,600. So everybody understand about the concept, correct? How, first of all, how we are going to calculate the depreciation? The original cost amount into depreciation percentage into, okay, month, okay? If it is 1 year, no need to put anything. You can easily calculate 8,000 into 10 percentage, whatever it will amount will come. It's called that amount is 1 year. But in the partial year, you have to make like for example, they bought March month, so I have to put 8 month, correct? 10 month. For example, April month, 8 month. So whatever month it will come, you have to put remaining month because the previous month we don't know, that machine is not with us. When we bought like a July, August, September. So when we bought after only what are the remaining month machine with us, so we have to calculate. Then next year this not worry about those things because next year full year we are going to use the machinery. You can see the second year you can easily understand. Like whatever amount will come 7,600 for the last year. Have to put to balance, okay? You have to carry forward here, okay, to balance 7,600. Then the same thing, year will be closed which date? As per the question, 31st of December, okay? The next year is 2000 because machinery is purchased 1999. This next year is 2000. So that's why we are going to close this year depreciation like 8,000 into 10 percentage. This is the full year. You can understand clearly why this first year it will come 400 because that is 6 months. The full year it will come 800. So you have to minus the 7,600 minus 800. You can, I already explained, you have to see the question, original value, you have to take all the years, correct? So that is why 8,000 into 10 percentage. This is, for example, this is written value, we have to take 7,600 into 10 percentage. I understand clearly? But this is straight line method. Have to take original, when we purchase the machinery, what is the original cost? The same thing we have to use here. So that means the 7,600 minus 800, the balance is 6,800. This is the second year. This is the whole year, correct? The third year we are going to see like same 6,800 we have to put it in the to balance, and that year 21 the December 31st, same calculation, 8,000 into 10 percentage, same value 8,000 it will come. We are going to minus like 6,800 minus 800. That means balance will come 6,000. That 6,000 is, it will go for the next year, correct? But it will go for the next year to open balance, to balance, okay? But this year you can understand clearly, correct, how we are going to calculate. The original value we are took it, and whatever the percentage it will come, we are going to calculate. And the last, see how they are going to calculate and how it will come profit and loss account. You can see this one. Our after the fourth year, that machine value is 6,000 as per the depreciation, correct? 6,000. 6,000 is as per the depreciation amount. We have the 6,000, that material machinery cost value. Now we are selling. When we are going to sell, 31st of March. So have to put 31st of March. By bank we are selling. So 4,000 we sold that machinery. Correct? And the same thing, we used January, February, March that machinery. So we have to calculate 3 months for that year depreciation amount. Okay? Depreciation account 8,000 into 10% into 3 by 12. That means 3 months divided by 12. Okay? March they sold, that's why we used 3. So the depreciation value is 200. So balance amount how much we got? 1,800. That is for the profit only, not for the loss. This is a sales only. So we got the we got the loss on profit, correct? So because it's the loss, our value is 6,000, but we sold only 4,000. Okay, and 200 also depreciation amount. That means how much it will come? Like a 3,800 only for the value, but so 5,800 is the value, but we sold for the 4,000. Okay guys, next video I'm going to explain about straight line method and return value method. Okay, thank you guys, thank you so much.